Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments on this Thursday, February 21st. Well, a little bit of action in the overnight session. We're up firm, getting back to putting on the front burner again the talks between the U.S. and the Chinese. We're up roughly around 10 cents in the wheat. We're up around 6 cents in the corn, a dime in the beans. We're up around 2.5 in the meal, and we're up around 30 points in the soybean oil. And as it's being worded is that the U.S. and the Chinese are now starting to outline the commitments in principle on the stickiest issues, and they're making significant progress towards ending this trade war. And what they really did is their new term in here, MOUs, their memorandums of understanding on the structural issues, intellectual property. They're starting to get a little bit more finite on that. So there's a little bit of agreement there. And we'll see how the outcome comes, but positive steps. And then also they're listing the 10-item list of commodities, goods that the Chinese may buy. So what is that list consisting of? So that backdrop kind of got the market a little bit enthused in the overnight session. I guess we knew that this was going to be coming as far as results, be it good or bad at the beginning of the week. I guess I'd sit back and wonder why the funds were so aggressive to start off the week on the short side. And now once again, here we are finding out some news to see the market come on back instead of just sitting there awaiting this news. So having said that, that's one thing that's going on. Number two, we're going to have the USDA Ag Outlook from Washington, and the trade will be keening in on what's going on with the new crop S&Ds that the USDA wants to project. So it's kind of interesting to go and look at the trade guesses. The trade guess for the bean carryout is kind of a little under 900 million bushels, but last year at this time we had a carryout number of 460 from this conference, and we had beans at 1025-ish for the March contract. Now we're currently at $9. We have a 900 carryout instead of the 460. We also had problems in Brazil and Argentina last year, which we don't this year. Is a 1025 down to a $9 justified as far as discounting last year's price and carryout numbers versus this year. Almost the same thing with the wheat. Last year they had a carryout number of around 930. Now we're over $1 billion. We were at roughly at around 530 at the wheat market last year. Now we're at 480. Have we kind of discounted that as well? The interesting one then is now the corn, because last year we had a 2.2 billion bushel carryout. Now we're at 1.7, and last year we were at roughly around 405 for corn prices, and currently we're at 370. So there's something to think about. Once again, more political conjecture coming from the marketplace to go influence prices here today, along with the trade talks. Tomorrow we'll get the whole shooting match with the export sales coming out that have been delayed. I guess we saw the money flow earlier in the week, pushing the market to the downside. I guess the question is, what does money flow want to do with the markets now that the political news is coming on out? Having said that, going into yesterday's close, we have the funds basically net even in the beans, a little bit of a sizable net short now in the soft red winter wheat, and only small net shorts in the corn. Once again, these are my opinions, not that of ADM or ADMIS. Thank you for listening.